Saludos amigos y bienvenidos a nuestro programa de Miami Home Show con un servidor, Dailan Rubido, agente de bienes raíces, broker de bienes raíces y aquí para servirles y ayudarlos a entender más acerca de este mercado de bienes raíces y honestamente hacer real estate lo más simple y entendible posible para todos ustedes. Conmigo tengo hoy como invitado especial a Louis Pacheco de Encore Mortgage. Louis, ¿cómo estás?
Muy bien, Delan, gracias por invitarme.
Bueno, estoy muy contento de tenerte aquí con nosotros. La semana pasada, si recuerdas, estuvimos hablando acerca de los 7 pasos para obtener ese sueño americano, ¿verdad? De poder tener su casa. Y uno de los temas que estuvimos hablando o uno de los puntos más importantes, era de cómo obtener un préstamo hoy por hoy y cuáles son los beneficios de trabajar con un banco y entender lo que el banco ofrece y algunos de los términos que ellos explican para poder cumplir ese sueño americano de poder tener su casa. Y por eso es que hoy vamos a expandir un poco más acerca de ese punto de cómo puede obtener un préstamo, qué tipo de préstamos hay disponible para todos ustedes allá afuera, las opciones que hay. And you need to know all these options because right now there's a lot of lenders out there, right? And I just shift on you on the Spanish and English, so I hope you don't mind with that. So, Louis, again, feel free to talk to me in Spanish, English, Russian, however you feel most comfortable.
All right.
But we want to make sure that we get to you the most relevant information when it comes to loans, especially today. The title for the presentation today has to do with qualified versus non-qualified mortgage loan. What's the difference? En otras palabras, los programas de préstamos calificados y los no calificados. ¿Y cuál es la diferencia de estos programas? Y para eso, Luis, que es el especialista en lo que tiene que ver con préstamos, nos va a explicar un poco más. Y adicional a esto, quiero que sepan que Luis tiene un background bien extenso en bienes raíces. Él es no solamente mortgage broker, o sea, como lender, pero también es broker de bienes raíces, o real estate broker de muchos años, 25 años me estabas comentando.
25 ¿verdad? Años.
That's awesome, man.
Sí, 25 awesome. Años, lindos 25 años.
Excelente.
He visto mucho.
Excelente. So, Luis ha visto muchos cambios durante este transcurso de tiempo en lo que es el mercado de bienes raíces. Solo la información que va a dar él hoy es muy importante, así que queremos su mayor atención posible. Luis, estuvimos hablando hace un rato, ¿verdad? Me explicaste, ustedes se especializan en los qualified y los non-qualified mortgage loans. ¿Me puedes explicar un poquito acerca de eso?
Ok, voy a hablar en inglés para explicarlo un poquito mejor. Okay. The qualified mortgages are the traditional FHA conventional loans. People will generate their pay stubs, their bank statements, their taxes, have all the documentation, have everything documented for a qualified mortgage. That's typically a mortgage loan that will go through an FHA conventional and then go through the secondary. Fannie and Freddie will pick those loans up.
Right.
Non-qualified mortgages are for like that business owner, self-employed client that has credit, has the money, but doesn't have the bank statements or the pay stubs. So it really is a really neat alternative because, you know, the world is changing and certain things, not everyone qualifies under a traditional. And non-QM has really opened up the eyes to second homeowners, investors, and even first-time owners that just don't quite have the paperwork to qualify for a regular loan.
Right. All right. So that kind of like answers that first question, which you know, had to do what's the difference between the two, and it's very important for us to know. I forgot to mention if you're watching this for the very first time, whether you're watching on Instagram or YouTube or on our any of our pages or our website, please make sure that you subscribe, you like, and you share, and set a reminder for yourself. We do this every Tuesday at 4:30, so we don't want you to miss anything. And as we go into the show, there's going to be so much information that if you can take notes, please do so as well. So, Louis, thank you so much for explaining the differences. That's great to know. So, we're in the middle of a pandemic, right? We still kind of are. So, COVID had changed everything, the way we do things. So, how COVID has affected the financing industry?
Okay.
And what are we to expect?
Well, obviously, COVID has made these radical changes where it's made it's okay to work from your home. You know, a lot of businesses are having difficulty getting people hired because people are now figuring how to make money versus, you know, online, social media, and just being independent. So we're going to have a lot of independent um, self-employed clients that don't have those pay stubs,
Right.
that don't have the W-2s to qualify for a qualified mortgage. And the non-QM product, which is the non-qualified mortgage product, is going to be something that will fill that need. As the world has changed, there is now a giant group of people that have evolved that are going to want to buy houses or buy a second home,
Yeah.
and have equity in their home, but they just lack the documentation.
Mhm.
And that's where, a lot of people have the misconception that non-QM is a hard money loan. It's not. It's a 30-year fixed loan that gives them the options to do whatever they need to do. And if they and can get a better rate, they can always refinance and get out of it. So it's a great alternative.
Right.
But the world, we have to evolve with what the world throws at us, with financing, with homes, with interest rates, with inflation. And I think at the end of the day, you have such a diverse product that can basically opens up. Not enough people know about it.
Right. So it gives more opportunity to different, for everybody pretty
Right.
much. So you mentioned about the W-2, self-employed. So non-qualified loans or mortgage programs are mainly for the self-employed people, the 1099s, right?
Right.
So how 1099s can help me or let's say somebody qualify for a loan?
Okay. Well, as we all know, realtors and brokers and business owners, we all want to be very savvy with taxes. We want to pay our fair share of taxes, but there's times that we position ourselves where we have a great year, and then our tax guy says, oh my God, you got to pay this much, and then we start digging to find all these write-offs that we're able to do, and then we end up shooting ourselves in the foot. We end up shooting ourselves because we got this great income, and then we just wrote off 90% of it just so we could pay 10% of our liability.
Right.
With just your 1099s nowadays, I could qualify you and give you 90% of that income stated in your 1099, and I don't have to see your taxes. I just have to see your 1099, and I can see your bank statements where the money's at, and that's really all I need to do to qualify you. I mean, that's a product that's never really been readily available. We've had stated income, we've had no income, no assets, big disasters that happened back in 2007. But now they're doing things a little differently because you're putting skin in the game.
Yeah.
But they're obviously offering you a good product that's 30-year fixed, and they're qualifying you with your 1099. So
Right. Well, that's good to know that you mentioned, because now we're in tax season. Right?
Sure.
A lot of people are going to start filing taxes. You have a lot of self-employed people, which is the same thing that you just mentioned. They had a great year, and now they have to find ways to not have having to pay that much money in taxes, but then at the same time they want to buy a house.
Sure.
Right. So if you have any questions, like a lot of us that are self-employed, we always want to see, like, we don't want to cut ourselves short, in the sense of, now we want to buy a house, but then we had a great income, we had a great year last year, and now we're going to file for taxes. So even before you go see your tax advisor, but you have in mind that you want to buy a house, I will highly suggest that you contact your lender, contact Louis, so he can talk to you and kind of guide you on what you need to get done and the type of documentation you can possibly present as well, that will help you in your mission or your goal to buying your home. Now, Louis, you were mentioning earlier, you were talking about the debt service.
Okay.
And you mentioned about the difference between direct lenders and correspondent lenders.
Okay. Well, Encore Mortgage, we're direct lenders. So we basically, there's a difference between two different types of lenders in the area, which are correspondents and direct. Direct, we are the one that will originate, will approve, will fund, will close, and will service the loan. So we are doing everything all in-house. We have direct access to the underwriters, to the funders, and it gives us the opportunity to have control of the deal and how quick we can get a response back to the client. A correspondent has to go through many different channels to get responses. A correspondent lender will go ahead and approve a loan, give you a list of conditions, and then after you've met those conditions, the underwriter could go and create a whole nother list of conditions. With a direct lender, you're going to get one list. We're going to see it. That's it. We move on and we proceed. Now, the nice part about being direct is that gives us the opportunity to look at the transaction and see the deal and tell you we can do that deal. The opposite side sometimes has to go through different channels to approve it. So it does give us an edge in the market. It does give us the ability to be more efficient with our yes and no's, and saves everybody a lot of time and grief, and pain. Because sometimes, you got realtors and you've got bars and you got sellers and you got a multi transactional situation happening where one doesn't close, and it becomes you want to be with someone that can give you the answers as quick as possible.
Absolutely.
Versus having to wait.
Because then you have the seller on the other side concern or worry if the buyer's going to get approved or not, especially in this market. And you have the realtor who's also, anxious to know what's going on.
It just becomes a really ugly trickle effect if lack of information comes into play, especially as timelines get closer and closer and closer. So will you say that then the direct approach, direct lender approach will be the best option or one of the best options? Well, I believe, because I'm a direct lender, it is the best, only because it allows me to be able to be efficient. I've been in the business a long time, and one of the things for me that has kept me in my game is learning how to be efficient, working with business partners that are efficient. So once I get a deal, I move on, I give it to an efficient business partner, I go look for another deal. I'm not babysitting that deal and holding that deal. And the trick of real estate really is just, get the deal, get it all dialed in, have the right business partners, move on to the next deal.
Awesome.
And that's like any business should be thinking like that.
I agree with you 100%. So when it comes to giving buyers options on financing, and you already mentioned some, what are the benefits for them? How would that make that experience for them a lot more enjoyable?
Okay, so back in the day, now I'm going to go back, I've been in the business a long time. Back in the day, you would go ahead and you would pre-qualify somebody, and you'd basically say, okay, this is what you have. This is what you're going to get. And that person, that's all they were going to get. That's their decision based on their income. That's what they're going to get. With having such an array of products available now, with FHA, with conventional, with VA, non-QM just opens up a whole nother avenue where you can literally give a client multiple options as to, you can buy this house with 3.5% or 5% down or 10% down. And if you don't have the documentation, you can buy this house with 15% down. And you educate. One of the really neat things that we do at Encore Mortgage is we won't just send them a good faith estimate. We'll send them a complete comparison of their options, and it'll have a video welcoming them, of us welcoming them and letting them know what options are in place. And when they get on the phone and you're on the phone, we're being interactive with our good faith. We're showing them that option 1, these are your fees. Option 2, these are your fees, your down payment. So the client actually feels warm and fuzzy and begins to understand the product. A lot of people just want to have the client just sign right here and that's it. We take the time to explain it. We want them to be educated, because the next time around, they're going to give us a call because now they know more.
Right.
And I think it's just, we invest the small time in the client. That client becomes your client forever. Because, and that's the growth of any business.
Right. How would you say, okay, so when it comes to a buyer, right, and they're going to start the loan process with you, you mentioned earlier, you guys have a lot of tools, technology. We're joking around, like, what if somebody call you right now and they want to put a loan and say, I'm ready for it. Like, I can actually get it done.
Right.
So what are some of those tools and benefit that Encore offers buyers that want to apply today?
Well, we have a lot of programs that allow them to be able to go in and see what their properties are worth. The tools are designed to give the borrower a idea of where they stand with their home, with their equity. Those are one of the tools that we have. We have a lot of different type of tools for our business partners as well, to kind of help realtors and brokers service their clients. When a client is going to, you sell a property to a client and we do the loan for your client, we keep you guys in this triangle of trust where we're constantly updating the buyer of the market area. They have access to wanting to know what's going on. And if tomorrow, they decide to click on one of our links that says, hey, I want to know what my house is worth, I've been thinking about consolidating, or they're looking at different neighborhoods, it triggers us, it lets us know. We communicate to our business partners and say, hey, you know what? That buyer that you sold the property is looking at a bigger home. Maybe you should give them a call. And, we have different type of tools that are set up. We have a lot of comparisons where we allow the buyer to get a clear picture of what are all the options. Our biggest seller is really explaining the details of every option that we're going to propose to the client in such detail, where they're seeing everything down to the fee, down to what it costs, and there's no surprise. There's no your client needs more money at the end of closing. Nobody likes that.
No.
So we covered that in the beginning.
So that's great information as well. So if you're a buyer, now you know what options you have via the resources that Louis and the company, what they offer you as a customer, as a buyer. But if you're a real estate agent, you're a real estate broker, and you're looking for ways to be relevant in today's market, that's the way to go, right? You want to be partnered with people that they have a system in place, and while you out there trying to get business and helping your customers, and your client is being served by a partner, somebody that is gonna help you, and something happens. Let's say they want to refinance, or they want to do something else, or they're thinking of selling, but they start asking questions. If they ask the lender, now you're gonna get notified of something, and that's beautiful, right? Because agents, we tend to go after the next deal, and sometimes we base ourselves on the leads that we're getting, but there's a whole market out there of your sphere of influence, the people that that you have worked with before, and those are the people that are going to refer you more business.
Absolutely.
So if you have a system in place like this one that will keep you relevant, that's how a good agent should be handling business in today's market. And it works both ways, because they'll
absolutely. I think it's just having the right business partner. Any affiliation that you're going to be with somebody, if it's at the same caliber as where you're coming from, you're in a good spot. And I think at the end of the day, it's always good to look at the efficiency of your business partner. Like, for example, you look at realtors and brokers now knowing about non-QM product. I would be making a list. Listening to this, I'd be making a list of who do I know that self-employed, who do I know that, and you're going to find 5 people that you can call, and offer them something that maybe wasn't around, a year and a half ago, that you wanted, that you told them, no, I can't do your deal because it didn't fall under that qualified mortgage. But, having an efficient business partner is always going to bring value to the table, ideas, business approaches. And, I think it's in any business. I think if you're associated with the right partner, I think any business can definitely grow.
Absolutely. And that's priceless, right? So I'm dying to get to this question, and because we were talking about it earlier, I know you brought some documentation on that as well. So, okay. So one of the questions that I had was for you was the bank statements. How can a bank statement help you qualify for your next loan, and what options you have, especially for like an investor?
Okay. So we have different type of loan programs that you could use up to 24 months, 12 months, and 2 months. Obviously, the more information you give, the better rate. The interest rates are all dictated by your FICO score and the type of property. So you really have to look at the bank statement. We're interested in looking what the deposits are. We want to see what the deposits are so we can calculate an income.
Right.
You know what I mean? And if you give me 2 months, I can calculate an income based on 2 months, but obviously the rate will be a little bit higher versus give me 12 months or 24. So all I really need is your bank statements. If you have a 1099, wonderful. We'll use your 1099s. If you don't want to show me your taxes, no problem. I don't need to see your taxes. Obviously, if you are a bar, the ideal scenario, if you are a business owner and you have your taxes, you have your 1099, you have your bank statements, but you don't have the pay stub and you don't have that, and you have decent credit, or, I can go as low as 600 FICO score on some of these deals. You know what I mean? That's a low number, but obviously the higher the FICO score, the better rate. So everything is, with the bank statements, the more information you give, the better rates you're going to be presented. The rates are very decent. Even at a high point, you're looking at, 6.5, 6.75. I mean, I'm going back in the business 25 years. I used to sell real estate when it was 7.75, 7.5. And
that was normal.
That was normal. People have been in the business for the last, 5 years, 10 years. All they know is 3. That isn't normal.
Yeah.
I mean, inflation is way above that number. And there's so many things that are going to change, as, we shall see. But, change is always, that's one thing consistent about our industry is change.
Right.
We'll see how that presents itself.
Awesome, man. So, obviously you've been, like you said, 25 years in the industry, right? As a lender and as a broker. So you have seen both sides of the industry. How would you say this market is heading to? How do you see it developing?
Wow. Okay.
Deep question. Huh?
Yeah, it's a deep question because, you don't want to be wrong on camera.
No.
So I might be right, but I would say safely that we have an adjustment that's happening. Inflation has definitely reached a crazy number.
Yeah.
Costco prices. Have you guys gone to Costco lately and seen the inflation, what that looks like? I think the rates are going to climb. They're on a upward trend. There's, so many variable factors that can affect that. But all the data shows that the rates are going to go up and the market's going to adjust. Those sellers that are making realtors list their properties $100,000 over an appraisal value, we're going to see that kind of adjust itself, as it should. It can't keep going. It's madness, but, I see an adjustment happening. I see it leveling off. I don't see the market opening up like 2008 and swallowing up half of the community, but there's COVID created a big forbearance for some banks. There's a lot of banks out there that have been carrying this weight of not being able to take action on defaulted loans. I think that's a big indicator of a potential REO market that might present itself. Obviously, the government has been incredible in printing money to keep everyone afloat, but that too shall end.
Yeah.
And I think an adjustment's going to happen. I think non-QM, last year, 80% of the loans were qualified mortgages. And as we proceed into this year, there's a lot of data that really presents non-qualified mortgages is going to take a higher position in the qualifying, because as the market adjusts, Fannie and Freddie begin to adjust their guidelines and their ability to approve every loan. So I think there's going to be an adjustment that's going to be good for our industry. I think you can make money in a high and a low. Don't let the market freak you out. Things are going to change. And if you're in front of the curve and you're making the turn, you're pivoting at the right time, and you're learning about different products, and people are watching your show and you're educating people, I think people are going to be, being able to pivot at the right time.
Right.
The worst thing is going into something with no information, and with what you're doing and the information we're sharing, so much information for a buyer or even an investor who wants to buy a second home. Our company is now doing up to 8 units on the non-QM. That's huge. We only used to go up to 4. So, we're the expansion of getting people to create wealth through real estate is there. It's just shows like this and just going out and sharing to brokers and realtors what's out there. I think we can adjust with the change, and it doesn't have to be a hard fall. Some people will fall hard because that always happens with over leverage and situations, but there's light at the end of the tunnel of this change. And I think kind of getting in front of it and attacking it smart, I think will position you in a really nice spot.
I love that explanation, because one thing we always talking about is make sure that we get informed with enough time to be able to pivot when the time comes, right? Because that's what this business is all about. Partnering up with people with the caliber of information that they have, the type of tools and technology that they're looking after your best interests. If you're a real estate agent, you want to know more of this. You want to be able to talk to people like Louis, add them to your power team, right? Because whatever happens in this market, since we don't know, the rates continue going up. We don't know how higher is gonna get. We don't know what's gonna happen. That's a reality of things. We get buyers saying like, I'd rather wait until the market goes down. We talked about that earlier.
Yeah.
And that could be like a watch off, if you think about it.
Sure.
So there's many things and many questions out there. The more informed you are as a real estate agent, as a broker, the better you're gonna be able to respond to the inquiries from buyers or sellers. But at the same time, you'll be able to pivot on time to be able to make any adjustment into your business. So like Louis said, you can make money when it's good. You can make money when it's bad.
Right.
It doesn't matter. That should not affect your business. Louis, thank you so much again. So you have an Instagram account. You have a phone number. Can you share your information?
Well, we're Encore Mortgage Miami on Instagram, and you can catch me at Pacheco Louis 71 at Instagram. Also, phone number is 305-842-0080 if I can help you guys with any assistance. And well, give me a call. Let me know if I can help you with anything.
All right. We're going to be able to share more information for you as we go. My name is Alan Rubido. Thank you so much. Just to wrap up the show, and I'm a real estate broker. Please stay tuned because we come every Tuesday at 4:30 to share good information with you and trying to make real estate simple. So join us every Tuesday at 4:30. Have a good one.